Hi, everyone, and welcome to today's costing session. We're excited to have you all here. I'm Dana Baranowski, the marketing manager here at Elevated Signals. And today we're going to be chatting about a topic that's not really talked about in public, at least, but it's incredibly important for cannabis producer profitability. So we really wanted to bring this to the forefront today to our community. We've got Dave, who's a CFO advisor with Dope CFO, and he'll be diving in costing and what he's been seeing in the cannabis industry. Then we'll have a short panel discussion unpacking some costing issues that producers run into as they scale. And at the end of the session, Hardeep will give us an intro on how Elevated Signals is starting to think about cost accounting for cannabis producers. So before we jump in here, I just want to let you know that we will have a Q&A session at the end. So you'll see a Q&A tab in Zoom just below. Feel free to add your questions there, and then we'll address them at the end. As well as there will be a recording of this session at the end, so you can watch it again, or you can share it with your team as well. So I'd like to pass it to Hardeep and Dave just to do a quick introduction about themselves.
Yeah, Dave, I'll let you go first.
Great. Hello, everybody. My name is Dave Woodbeck. I'm with an organization called Dope CFO, which in and of itself is cool enough of a name that should bring some credibility to what we're talking about today. But I'm a recovering CPA. I've been in the finance world for a long time. But like many of you, I've started a business, I've built a business, I've sold a business, and I've got the battle scars to show for that. So I'm looking forward today to talking to you about a subject that I think is really important and like Dana said, probably isn't discussed enough, and that is really a way to understand your cost architecture and how it applies to your profitability. So looking forward to chatting with you all about that today.
Awesome. Yep. I'm Hardeep. I'm the COO of Elevated Signals. Some of you may know me already, but yeah, day to day, I work with the product team, marketing team, sales team, and customers. But ultimately, my goal is to try to make sure that we're building the right product and solving some of the pretty important needs in the industry. And I think one of the biggest needs right now is understanding profitability, understanding just how a business is tracking its financial numbers and efficiency around that. And so, yeah, that's why I'm really excited to have Dave on, and I think we're going to have an awesome conversation. So, pass it back to you, Dana.
Thank you. All right, well, pass it back to Dave to kick us off on some costing 101.
Excellent. So I thought it'd be a good chance for us to chat a little bit and get some foundational structure in place. So we're going to talk about what we would call a rock solid cost architecture. Now, before we do that, I just want to share some numbers with you. These are interesting thought numbers. So I'm going to share something about 70%, 83%, and 19%. Let's take a look at what businesses are facing. Now, I got to be honest with you. Every time I look at this metric, it kind of shocks me that the failure rate of small business is so high. In fact, I remember waking up around the 5th year and one day of my business thinking, oh man, I'm going to make it. Only realized I only had a 50-50 chance of still making it to, past that point. So it's a bit of a sobering metric. And again, part of the foundational things we want to talk about today are to help us overcome some of those challenges. And the reasons why businesses fail, it's kind of a oh duh, but they fundamentally they run out of cash. But what I think is interesting about this is when you survey these business owners, that they didn't feel like they were outcompeted. They felt like they had mostly the right team. The market was there. The things were there for them to be successful, but they still fundamentally ran out of cash, right? So understanding your profitability, and especially as you're looking into the future and making investment decisions about where you're going to expend resources, that becomes critical. And some of the cost architecture that we'll talk about today will help you see both where you're at today, but probably more importantly, where can you be in the future? And then really what this particular webinar was built off of is the idea that it's a challenge for cannabis businesses to be profitable. Back in 2024, when we were at the CPA conference, only 19% of smallish cannabis companies were profitable. Now, some were creeping up into the neutral zone, right? But only 19% profitable. So again, what can we do from a cost architecture standpoint to help companies get along and make it further down the path of being viable and being profitable, right? We're not in this to lose money. We're in this for lifestyle. We're in this for wealth generation. So, again, what are some of the foundational things we can do to make that happen? So I already introduced myself, Dave Woodbeck with Dope CFO, certified advisor. I'm in Minneapolis. I opened the Minneapolis office about 24 months ago to help with the Minnesota rollout, but we have clients that are nationwide and international, including Canada. And I'm helped out by my colleague, Justin. Any resemblance is purely coincidental. Now, part of this discussion has to do with the realization that almost all markets have gone through some kind of compression. Now, I know we've got some Canadian companies on this webinar as well. Obviously, I'm talking about the functions in the United States, but in chatting with my colleagues in Canada, there's compression there as well. As those businesses get going and markets get stabilized, there's almost always this price compression. And that price compression, especially if you're in cultivation and manufacturing, it can really sneak up on you and hit you hard because it comes fast, and your ability to unwind and unpack your cost architecture at that point is challenging. So when you're in a good time, or you're at least you're not in a bad time, that is a great opportunity for you to really get your hands around your cost architecture and understand how your unit profitability is working, so you know and can maybe even create some plans should things go poorly. But those plans can also certainly include when things go well, right? So I just always am struck by how the cost compression is so consistent across state rollouts here in the US, right? And the challenge here is, who's really going to help you solve this problem? And I love this quote. I actually got this quote from a CEO I was talking to. But another accountant isn't going to solve this problem. What I would suggest that you really need here is leadership, somebody that's going to be able to lock arms with operations, with sales, and really go and start to solve problems. If you hire an accountant or even a fractional CFO and they really only take orders, i.e. they don't lead, then you probably got the wrong person, right? So I just wanted to share that with you, that you really need some leadership here and ways to think about the problem. Right. And so when we talk about cost architecture, there's a lots of good reasons to have a strong cost architecture, but two of the primary ones that I want to talk about here today are compliance. You've got to be ready to feed the beast that's constantly showing up at your door, who wants to look at your books and know that you're compliant in the many ways that one needs to be compliant in this industry. And the second is to really start to certainly have a broad perspective of your cost architecture, which typically you can see through your P&L, but then also be able to drive that down to more granular levels that can really help inform your decision making. And a lot of this really stems from the way that we think about our business and the way that we service the market at Dope CFO. Is you have to have a really strong foundation in order to build your house, right? In order to build your pyramid. If you don't have a strong foundation, it gets even more challenging to make the right kinds of decisions that you're looking to make as your business, both either, again, growing is as big of a challenge as not growing. So you have to be able to make decisions, no matter where your business is sitting at that time. Right. So let's just look at a couple things here. Let's just first look at compliance. Both the US and Canada have various regimes that are meant to really shepherd over compliance. And one of the things that always strikes me when I look at this is that a lot of their compliance does have to do with quote unquote accounting and inventory and so forth. And there are functional things that you need to do. Again, that'd be the foundational thing that you need to do in order to make sure that you're satisfying those compliant requirements. And in the end, the risks that you face are, multitude of risks, right? From anything from a slap on the wrist to serious fines to, they're taking your business away. So again, once you establish some strong foundations, then you can feed the beast when they show up at the door and be confident that you're going to be okay. And I think that's important from your ability to focus on the things that are important for your business, right? And compliance is important, but it's not the thing that grows your business. Right? And a good example of that is 280E, which of course is here in the US. But when you appropriately manage the way that you structure your costs and you can put them into your cost of goods sold in a reasonable manner, there is a chance for significant savings, especially on the taxation part, where businesses in the US, because of 280E, they're really taxed at the gross profit level, not at the net income level or at the EBITDA level, right? So anytime you can manage your 280E, your costs flowing through your cost of goods sold, right? You're going to be in a better position to save money on your taxes, or to at least have appropriately done your cost accounting in a way that the IRS says is required, right? So again, it's not trivial, but focusing on this part is also not really solving your ultimate business problems, right? Although again, in the US, it's a significant cash flow problem. So that's one way to think about compliance and the way that your cost architecture can help with that. But let's look at things from a different level and really start talking about how can I construct a cost architecture that's going to help me make decisions. So I want to share with you a bit of a breakdown on how we think about cost architecture and what we're going to try to accomplish with it. So on your left-hand side here, you have a whole list of various operating expenses. And what we really want to do when we think about our cost architecture, of course, we have costs that are not going to be applied to cost of goods sold, but we really want to say, what of the costs that we do have, what are they? How can we start to apply them to our cost of goods sold? Because the principle we're really looking for here is to match my costs on a production or a unit level to my revenue, again, at my revenue or my unit revenue levels. That's what we're really looking to accomplish, right? So doing that will help us match up the way that we attain revenue and the way that we spend that money or expense that money. Right? So we really need a method to accomplish this task. And so I'm going to break this down into just a couple chunks to try to give a simple overview of a cost architecture. Now, there are certain costs that we're just are not reasonable to try to apply into our inventory and ultimately our cost of goods sold, right? And that's kind of your big administrative things, advertising and marketing, travel, insurance, things of that nature, where both the governing body of accounting in the US and in Canada say, look, you can't take these things and try to apply them into your inventory, into your production cost, right? So you just can't do it. Certain costs are fairly easy to track into your cost of goods sold in your inventory, right? Direct materials, direct labor, etc. In our simple little example here, I'm just trying to show you an example of how we would take something like direct labor, right? 1.5 million, and we allocate that to where the status of our inventory is, right? So what this means is we have to know where we're at in our production cycles in order to properly apply that cost, right? And in our example, we have, 3 or 4 fundamental places where inventory can be at any one point in time, right? It's either in progress, it's in finished goods, it's been transferred to another division of ours, or it's been sold, right? In other words, cost of goods sold, right? So when I can track where those things are, then, and in this case, we use an equivalent units method, then I can take my cost pool and I can allocate it to where it belongs in my overall financial statements, right? So in this case, roughly 900,000 can be allocated to cost of goods sold, right? And now that should match up, of course, with the revenue that you have. And you're now starting to get a step closer to the ability to look at things from a unit level, right? And in our example, our overall cost per unit here is 99 cents, in this case, per gram, right? So that method is relatively straightforward, right? And then again, we take those dollars and that's what gets applied to our P&L, right, as a cost of goods sold, right? So that workflow becomes important in order to, again, understand how your cost architecture is now impacting your P&L. Let's take a look at the next level, right? So now I have a whole bunch of costs that are somewhat associated to my production, right? But not perhaps direct, right? So I have things like indirect labor. I have various levels of overhead between rent, utilities, depreciation, et cetera. So I have another pool of costs that I need to also start to allocate into my cost of goods sold, right? So it's just the ability for the finance team to say, hey, here are legitimate costs that are part of a cost pool that can be allocated into your inventory and your cost of goods sold. And that's all we're doing here, right? We're taking a simple example of indirect labor, which is roughly 436,000. And we just take that 436,000. Of that, the finance team has helped identify that 42% of that can be pointed towards production. And now we can allocate this 183,000 against where my inventory sits in its status, right? So this is kind of the base level of how to think about your cost architecture, how that lines up with your production, and then how you put those costs into your P&L, in this case, and cost of goods sold being the primary example, right? And so I'd call that kind of your baseline. Now, even at that baseline, right, now you can start to understand various parts of your business a little bit better. In this simple example, I'm saying, look, I'm not trying to separate my costs by strains. I'm simply applying my unit cost across all those strains because I haven't gone through the work to disassemble that. But I can now look at market demand revenue and see how does my revenue compare to what my cost per unit is. And I can start to make some rational decisions. And in this simple example, if there is more capacity, both in my ability to produce and in the marketplace for consumption for Gorilla Butter, right, then I should try to maximize that because I'm making the most money on Gorilla Butter, right? So again, a relatively simple example about how something that otherwise looks like functional accounting can now apply to business decisions that you're trying to make as you look at your business at more and more granular levels. Okay. One last example. Once we've got that foundational part completed, now we can start to drill down into deeper levels of our business. And this is where software such as Elevated Signals can really help us see where is our inventory at any point in time. And not only see where it is at any point in time, but have more granular transparency into what kind of inventory. Is it in vegetation? Is it flowering? Is it already over in processing? Right? And to have that visibility, that allows me as a finance person to quickly understand where my inventory is, again, using things like equivalent units, and there's other methods that we might want to use. But then I can see that very clearly, and that aids me in my ability to say, well, it might be worth looking to see if I should create cost pools around my different flower strains, or should I create cost pools around the facilities in which I'm producing my product, right? Whether that be, greenhouse, indoor, outdoor, and things of that nature. But without that visibility, it does get more and more challenging. The more granular you get, the more challenging it's going to get to make that happen. And last comment here on this then, and I just kind of jumped ahead, but when you look at this, then you can start to see good roles for the operation team and the finance team and where they can lock arms and work together, right? So I need the operations team to be able to separate things out. In this case, I use facilities. So the greenhouse versus indoor, I need them to be able to separate that out through their workflows so that I can see where the inventory is at. And my finance role, I need to separate out cost pools between, in this case, facilities, greenhouse and indoor. And then we can use the same primary function that we used before. We can take those costs and then allocate them, right, across these facilities, right? And so these are examples of how you can start to take an overall cost architecture, fundamentally based on your P&L, and then start to apply it in different ways to your operations, your production, in order to get better visibility into your profitability. right? And so, I guess my parting advice would be if you don't have this yet, really start to build this as a foundation. And then as that strategic foundation is built out, your confidence in your ability to make smart decisions about the future and the past will become more, you'll be more confident in your ability to make those decisions with those solid numbers. And Dana, you can flash this again later, but and that's my introductory comments about, thinking about cost architecture.
Thanks, Dave. Yeah, I can definitely share this. I'll share all the contact information as well as the offer with everyone after the sessions as well. Thanks so much, Dave. That was incredibly informative, and I feel like it's a great introduction to kind of more of the discussion that we're going to be having today. So I want to open it up to everybody on the panel just to um, answer some questions that I think a lot of our audience has. The first being is, when does this sort of costing start to break? I imagine when you are a smaller company, you don't have as much complexity. Maybe you're dealing with one or two strains of SKUs. Maybe you're doing B2B. It's a lot simpler than when you start adding multiple SKUs and a lot more material and a lot more complexity to your business and your workflows. So from your experience, when does the costing and spreadsheets start to break? Is there a certain size of company, a certain complexity? Curious to hear both of your thoughts on that.
Well, I'll give you an example from my own experience when I was building my business. Now, granted, it was a service business, not a production business, but there's actually a lot of similarities. And I can talk about both in size and then in what we're really trying to accomplish. And so, 1 million to 5 million, and sometimes above that, almost all the owners I talk to, at least the good ones, they actually have a really good pulse on their business. They know what's going on, and they can almost do things like cash flow in their head. So they always have a good pulse on it. The challenge is they're the only ones with the pulse on it. And as you want to start to grow and understand cost, then you need to start to build a foundational system. So in our example, I wanted to have our account managers really know what was the profitability of that account, right? And so we put in systems very similar to what somebody like Elevated Signals would put in, right? It's a service business though, right? And then giving the account managers the same kind of visibility that maybe I was intuitive about allowed them to treat their little kingdom as their own business, right? And then we started to drive them towards profitability. So in the production world here, it might be, if you have a general manager over a set of facilities, greenhouses, indoor, giving them some perspective on how profitable they are at that level, right? Which would require some of the things that we just did, allows them to become better business people and start to grow their little kingdom, which grows the overall business.
Hardeep, you're on mute.
Unmute. Yeah, I can share my perspective as well. Like I kind of maybe have like slightly maybe well, not a different perspective, but something that's like very complementary to that. Like the way that I view businesses, over the last 8 years, it's like we've done a lot of these implementations, and we can start to categorize different businesses at different kind of operational characteristics as well as different revenue buckets. And so, it's always good to kind of put some names to stages, and that's kind of what we've done. But I think, Dave, like if I kind of say it from my angle, it's like the way that I kind of see things is like when you have a spreadsheet, ultimately what it is it's a database, right? It's like you're entering information in. And the challenge with that is that when you're scaling, what you're doing is you're bringing additional people into the fold. And when you bring additional people into the fold, now what it becomes is it's like a communication challenge as well as it's like a controls challenge of information. And so that's when, like, from my perspective, it's like when you look across any department within an organization, whether it's finance, operations, quality, whatever it is, it's really the point at which the system starts to break is the point at which the controls for that process start to break, right? So that's kind of my interpretation to that question.
So yeah, there's like kind of a distinct complexity where it starts to fall apart. So I guess in from your perspectives, once that happens, like what's the next logical step? Is it like, are they still managing all of this in spreadsheets? Is the next kind of logical step to look at ERPs? What is your thought process on that?
Yeah.
Yeah.
You know, I think people can jump into ERPs too soon, and they have complexity, and they have, they're challenging to implement, versus something like, let's say like QuickBooks is a pretty straightforward bookkeeping system that, it goes a long way. You can make it go a long way. I could never imagine running, bookkeeping out of a spreadsheet. You just can't do it. You have to have a platform of some kind to manage bookkeeping and accounting. But I do think people make the jump to ERP too quick. It can just be challenging. I think sometimes you got to work out your processes, um, not necessarily by spreadsheets, but at least work out your processes so that you are plugging in the right tools. Maybe best of breed is better for businesses that are on the growing side, because ERPs just oftentimes can take you sideways. And I'm not negative ERP; they're right for the right size and complexity of a business, but they can get in your way.
Yeah, that's a great insight. I guess, Hardeep, I want to like kind of ask you a follow-up question on this too. It's like, I think you've mentioned ERPs as providing like financial visibility, but a lot of the time, lots of companies also use it for operational visibility because ERPs like have so many different modules. So I wonder if you can kind of speak to that and what you've seen in the industry in terms of ERP use.
Yeah, I mean, I'll definitely, it's like not try to be biased on this one. Like the way, like I think I've kind of shared this with many people now, but when we started the business in 2019, that's when we saw ERPs starting to come into the cannabis space. There's many different ERPs, and we kind of thought at that point we're like, hey, well, we're kind of done for, right? Like the big names have come in. I think it was like Sage X3, some modules for that. It was like SAP Business One and a few others. And ultimately, kind of what we found. And we've been lucky to have like some really good insight onto this. Like one of our founders, right? It's like two of our founders both ran, you know, very, very successful manufacturing businesses, exited for very, very large amounts of money. And so the insights that they gave us was one of them brought in an ERP once they were at 100 million in revenue, right? And so if you kind of think about what that what it means, like when they brought one in was when their processes were very stable. They had a very good understanding of how to kind of perform in the market. They had good visibility in terms of the growth plan, in terms of how they were going to basically grow. So we're talking about strategy, right? Aligning the cost architecture, all that kind of stuff. It's like a lot of things were figured out before they actually brought in an ERP. And so the thing that I always ask people is like, well, how would you define an ERP, right? What does an ERP actually do? There's lots of different things. There's like HR modules, there's reporting modules, there's inventory modules, manufacturing modules, purchasing. There's obviously the bookkeeping aspect, right? And what all of these modules are trying to do is basically kind of help that system move in lockstep with each department. And the challenge with those in the cannabis space is that this is still very much so a growing industry. What you're selling into the market is possibly changing every 3 to 6 months, which means your SKUs are changing, which means your bill of materials are changing, which means, maybe how you have your spreadsheet set up for cost structures is changing. And so there's a lot of like dynamicism to this market, which is not really conducive to an ERP where you kind of have to start to define all of your processes, add a lot of rigidity, and then try to basically run that from in an operational capacity as well. And so what I find a lot of teams doing very well is they'll bring in an ERP tool, but it's doing it's doing AP, AR, it's got the general ledger in there, they're doing their accounting components in there. But as soon as it hits the floor for production operations perspective, like this industry is still very new. There isn't a lot of people who both understand ERP and have 30 years of experience running and setting up SAP, like kind of like these very heavy tools. And I think that's where we've seen a lot of these tools not really get the reach that they necessarily might have been able to get reach in other industries. So that's my personal perspective on ERPs, right? So yeah.
I have a lot more questions, but I saw we have some Q&A, so I was wondering, Hardeep, if it makes sense to kind of jump into your presentation and then leave a little bit more time for the Q&A.
Yeah, let's do it. Okay, cool. So let me just bring up this part right here. Can you see this?
I see the growth map.
Perfect. So yeah, so before jumping into the presentation, the way that we've kind of started looking at our business is we're almost acting as kind of a team of CIOs, right? Chief Integration Officers for businesses, where we're starting to look at if you just think about any kind of business, it's people, process, technology, right? People, the industry is really good at bringing in people. Processes are getting more and more streamlined. There's a lot of people who are systematizing businesses. I think the technology part is where a lot of the cannabis industry has really suffered in terms of finding um, really kind of that right mixture of technology for different phases of growth for a business. And so this has been kind of very interesting for us as a business because when we started out back in 2016, 2017, the industry was just going to the 3.5 gram packaged flower. And so overnight, all of a sudden, it started turning into more of a CPG industry, right? Complexity is growing within this industry. And so the things that we had started out with, inventory, quality, what we're starting to see is kind of a lot of businesses, Dave, to your point, running out of cash, right? And so that's turning into kind of like what we like to call the bleeding neck wound, is trying to understand how to manage cash, how to manage cash flow, how to understand your opportunities of investment to grow the business. There's so many ways to play the game, as we call it these days. You can do retail, you can do B2B, you can do international exports. You can, even within B2B, you could do pre-rolls, you could do packaging, you could do cultivation. There's a lot of different strategies that you can really focus on. And so to some degree, there's sometimes too much that you could do, right? And so we've been thinking about this problem a lot. And one of the things that we've been really focusing on is like, well, if we kind of treat it as like, why do people, it's like root cause analysis, right? Kind of take the Toyota approach, 5 whys. It's like, why does somebody really try to bring in an ERP? It's, well, they're trying to really understand things that Dave's talking about, cost of goods sold, understanding kind of like profitability, which SKUs are doing well, which SKUs are not doing, which ones do we drop, where do we kind of maybe move the business if we want to do an M&A activity or we want to sell to private equity, whatever it is, right? So in this pursuit, we try to look at this ERP and we're trying to really understand the financial system, like we're trying to understand the financial lens of the business. But in order to understand the financial lens, we have to have really good data coming into that system, right? And so this is where what we've focused on over the last, 8 years has been building a really good tool to kind of capture a lot of the information. So this is a report from Elevated Signals. This is just from my demo instance, but what this is doing is basically this is all the transactions that have happened in the software, right? So I'm going to come back to this, but I'm going to go back to the presentation for a second. So just hold this. So what we are doing is we are calling this, let me just see if I can go into presenter view. So has it gone full screen for you guys? Okay, great. So we're calling this live costing because what we're trying to do is we're trying to bridge production and cost flow over to the finance world, right? The thing that we see is that there's multiple systems that most organizations have. Even if you deploy an ERP, we're still seeing a lot of people running their manufacturing on the ground on spreadsheets. They've got batch records. The batch records are capturing inventory data. Someone's transcribing that into an ERP system. Or with Elevated Signals, you're taking reports out of Elevated Signals and you're kind of transforming those in some way through spreadsheets, and then you're kind of making your adjustments within your financial tool. So multiple systems that don't talk to one another, regardless of what kind of direction you've taken. And so that's leading to a lot of duplication of work for finance teams, basically, and re-entering operational information in a different way into a finance system. We're seeing a lot of delays, like errors within reporting. Closing the books takes too long, right? Audits, there's risks within that. And then the other part is we're seeing the traceability, right? So records and transactions that have been made in the financial system of record, linking those back over to the production side and understanding where some of those costs came from. That's also kind of a challenge that we're seeing. So based on that, we kind of have our philosophy around this. So we have three pillars. We want to basically be able to provide clarity. So every transaction is logged and visible. We want to have simple workflows that mirror real world. So what production is actually doing versus what systems are telling you to kind of like how to log information, right? And integration. We really want to try to figure out how to integrate the operational world with the financial world in a way that is successful for this industry, because we haven't really seen this work out very well. And so for this, the way that we're really looking at this is I kind of mentioned this, right? We have this, we call it the additions and reductions report, but what this is really material debits and credits from Elevated Signals. It's transformation, it's purchases, transformations of product, and sale of product. And so within this report, you have lot information, you have units of measure, you have the quantities that were produced or consumed from your inventory, and a lot of other information in terms of also the type of work that's happened, right? So if we just think about this for a second, this is almost like if we're thinking about it from the QuickBooks world, it's almost like a bank statement, right? This is a bank statement that we get out of Elevated Signals. And what we want to do is we want to transform this based on some rules that we have and apply it to different GL accounts within QuickBooks, Intact, Business Central, whatever might be on the other side. And so that's the project that we've been working on. We're calling it live costing. And so basically this is what you're starting to see. So those transactions in that ledger that I was showing, those are getting pulled into our live accounting, our live costing system. This live costing system is then looking up price information, and it's taking each one of those line items and associating the correct cost in terms of either the material that was produced or consumed, right? And those then are getting processed through rules. So almost like QuickBooks rules, right? In terms of you take your bank account, your raw transactions, you apply the rules, and then what you do is you put those into different accounts. And these accounts get mirrored from your GL. So I'll have, the raw materials, WIP, finished goods. And so if I just click into this one right here, what you might have under raw materials is your packaging materials, right? An account for packaging materials. And so this is kind of that bridge that we have seen as kind of like a big need for, is really finding ways to take that operational information, that clean data that Elevated Signals has been able to produce for organizations to be able to do the CTLS report and all that, and try to map and mirror that over into the financial system of record. So I'll pause here, but really this is what we've been working on, and I'm sure there'll be follow-up questions and everything like that, but um, I will pass it back to you for now, Dana.
Thanks, Hardeep.
Yeah.
That was awesome. We do have some Q&A from Michael. So these questions are, I think, are for you, Dave, specifically about some of your slides. So the first is, how do you arrive at equivalent costs?
Yep.
If you want to
Yeah,
pull
I see all three of them, so I'll kind of knock them all down here. So it's equivalent. How do you arrive at equivalent class? What's an example of cultivation overhead, and what's an example of manufacturing overhead? I think that's what the nature of the questions are. Equivalent units is picking a unit of measure that you can make sure that you can use that measure across an entire process. And so if we keep it simple from a cultivation standpoint, a lot of you all have an expectation of a yield on your flower that you can use as an equivalent. So whether you use pounds or grams, really doesn't matter, as long as you can track that equivalent unit as that product, moves through its process. And again, I will give, like, Elevated Signals is good at this. We used to have to do machinations in a spreadsheet. And again, people tend to make errors in a spreadsheet. So now we can do a report, and download that report, and we've got already a good basis of equivalent units. In terms of, so hopefully that answers the question. In terms of overhead, I have a client right now who has, they have cultivation, call it on one floor, and then they have some processing on a second floor, and a third spot on the upstairs where they have office space. So overhead is simply the things that we can't tie directly to any one of those three things, but there's a method to allocate that. And so utilities is the best and easiest example to understand, where I might have a utility bill for that whole building. And now I have to use some frame of reference in order to determine how much of the building is using what. And square footage is a typical good example, where I can take my $100 and 50% of it's going to the cultivation area, 25 is going to processing, and the last 25 is going to office space. Right? That's an example of overhead that I'm putting into the places where things are actually getting produced. If leave the office out of it, because we wouldn't put their cost into the production cost of goods sold.
Okay, great. So the next question is from Sean. Your table started with work in progress at the top. Does that mean that all inputs, for example, vape carts or jars, are to be included in your example as the work in progress allocation?
I'll just kind of answer it through a slightly different lens. Work in progress is anything that you're still trying to add value to. So in your example, if your vape cart or jar, if they're ready to be sold, then they're not work in progress, they're finished goods, right? So anything that you're still working on to add value to it is considered work in progress.
Okay, great. And then Raymond asked, how does Elevated Signals think through the difference of the data operations team's needs versus the data the finance team needs? It's a good one.
Yeah, Dave, I'd love to take get your take on this as well. But the way that, I mean, this has, I think, been one of the greatest challenges for the cannabis industry, is really, if you think about it, it's like there's at the end of the day, it's like two different domains of how to represent information and for what purposes, right? So if you think about it from an operational perspective, the data that you have is really to support, production. And then from a compliance standpoint, it's really to support audits, right? And so the production aspect, there's lots of things there as well, right? there's scheduling, there's you know, it's might be tied to demand planning, there's also labor planning, there's all these like components, right? So it's really about like how you get the job done and being able to report on how you did the job, right? In terms of manufacturing. The finance team also needs that exact information. In 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 technology, we actually have a very specific way of describing this. We call it extract, transform, load. It's called an ETL process. It's very technical, but what it means is that we take that information and we basically summarize it, and then we use it in a different context. In this case, for the finance team. So the finance team doesn't really need to know all the details and the nitty-gritties of all the operational information, but they need a summarized snapshot of what's happened over on the operation side so that they can take that summarized snapshot and apply it to the needs for themselves, right? And those needs are really should be tied to, you know, are we on track financially to hit like our strategy for the business? Right? So both the operations and finance team are supporting the strategy of the business, but how they're doing it is different. And so the informational needs are also different. So that's my take. But Dave, I don't know if you want to add on to that or
Well,
uh,
I think gonna be real quick. You know, we need the things that can help us do these types of allocations. So I need to know where's the inventory at, what are the equivalent units? You know, those are the minimums that we want to work with. And if then you can provide additional data points that let us know subsets of that. An example being, you know, what's the labor flowing into flower room 1 versus flower room 3? You know, if we have a hypothesis that you know that there's cost variations there, then we can use that data to again take a pool of costs and allocate it to flower room 1 and flower room 3, and then do an analysis to see is one more profitable than the other. So, you know, bare minimums are where is the inventory at and the equivalent units, and then additional data points that help us understand really the flow of dollars through those steps.
Okay, I know we're already over, so we have time for one more question. And then if anyone else has questions, feel free to send them to marketing at Elevated Signals, and I'll make sure they're passed along to Dave and Hardeep as well. But the final question is from John. What APIs are available between production and accounting software platforms in the cannabis industry?
sorry.
It's free
Uh,
for all.
yeah. I mean, I guess this one, what APIs? So is this like APIs in terms of like technical APIs, John?
Here, I'll open the chat up, John, if you wanna comment. 1 second. John, you can add your comment in the chat now, in the webinar chat.
Yeah.
Technical.
Well, I mean, this is what we've been working on, right? Is like the APIs to integrate elevated signals into those accounting platforms. I would say most accounting platforms have some sort of API, but there's no easy way to take the information from an operational tool and put it into those. Like usually you kind of have to build a product around that. So I'm not sure if that's helpful, if that's kind of what the question was really geared towards. But if you're thinking about like QuickBooks or anything like that, like they all have APIs. We've got an API, and so we've been basically trying to merge the two. And then I'll just quickly answer, I think Michael O'Connor there as well. So yeah, you're right. Overhead was not discussed. So basically the way that we're approaching rolling out live costing is that first we're focusing primarily on material costs. Then we'll focus on labor. There may be some mixture in there, but we're really focusing on the material costs. And then we'll look at, you know, any kind of other costs after that. So it's getting more and more complex as we get into that.
Okay, awesome. I'm gonna just flash the slideshow again, just so people can jot down Dave's info. Can you guys see that?
Yep.
Perfect.
Yep.
I've completely lost my chat though. But I just wanted to say thank you for everyone who's joined us today. Really appreciate you taking the time and learning a little bit about costing. Hopefully it was exciting. I saw most of you stayed throughout the entire session, so we always really appreciate that. If you want to get in touch with Dave, this is his contact information. I'll also send a follow-up email after this as well with our contact, his contact, as well as this offer from Dope CFO. And then if you want to know more about costing and what we're building, make sure to follow us on our social platforms. So at Elevated Signals on Instagram as well as LinkedIn, and make sure you're on our newsletter. Again, there will be a copy of this session as well. I'll be sending that out next week. So if you have any questions, please let us know. And thanks so much to our panelists, Hardeep and Dave. It's a pleasure working with you guys, and hopefully we can bring more sessions like this in the future. Thanks, everybody.
Thanks, Dana.
Take care. Thanks, everyone.
Really enjoyed it.
Bye, guys.